Hi everyone.
Hi everyone.
Hi everyone. So welcome to the live stream today. Very much excited for having you. It is the part 5 or in our IFRS masterclass for the ICA May 2021 examination. We started on Monday looking at how to study accounting standards. We looked at the various accounting standards that we have to focus on in order for us to increase our chances of passing the examination. Then we spent some time to look at the issue in relation to IAS 16. You saw what we did there, all the discussions about IAS 16 with the exception of dealing with deferred tax in assets. That is what we have not dealt with or we did not look out for. Then we also mentioned yesterday the issue about government grants, IAS 20. We solved some questions about that in that case. And today we want to build up and look at the next standard, and that is going to be IAS 23, that is going to be borrowing cost. So I see some of you guys joining the stream. Welcome to the stream. It's always a pleasure coming your way. Comment in the chat box with any questions that you have for me. Smash the like button to trigger the YouTube algorithm. That way we will be able to reach as many students as possible so that we can together impact a lot of people's lives. And I see some comments coming in from Bat Angwam said, anyone here? Yep, we are here. Nicole Williams said, hi, sir. Hello, Nicole. I hope you are doing well, Nicole. Eric Boabin said, give me a moment. Let me see if I can do this. Okay, so I think this is better. So I can go this way for you. Right, so Eric Boabin, I see you. You said good evening, sir. I hope you are doing great today. Yes, Eric, I'm doing well, and I hope you are also doing well. Andrew Oponbeko. Hi, Andrew. It's been a long time I heard from you. I hope that you are doing well. Welcome to the live stream today, Eric. Eric and then Andrew Oponbeko. Andrew. Right, so we want to continue with our discussions. I hope you have checked your results. For those of you who wrote the November 2020 examination, the results were released yesterday, and I hope that you have been able to check your results. For those of you who passed, congratulations. If you didn't pass also, no hope is lost. You can try your hands on it again, and you'll be able to take your life to the next level. Messi Goma, good evening. Happy to be here. All right, you are welcome to the live stream. I see some of you guys joining. Share the video. Let's reach as many students as possible watching the live stream. And comment in the chat box any questions you have for me real quick as we continue with our discussions for the ICAG November 2021 ICAG May 2021, not November 2021, May 2021. Right, so I have a short message that I want to share with you real quick about the ICA November 2020 results that has been released. Like I mentioned, I hope that you have checked your results. If you have not checked your results also, you can check. If you check your results and you passed, congratulations, it's a good news for you. But if you check the results and you have not passed or you did not pass for some reason, it's not a big deal. It's just an opportunity for you to try your hands on it again and try again, because there's always a trial. There is always an opportunity to try again. So I'm going to share a short message with you real quick about the results, and then we will come back in and then continue with our discussions. Right, so one of the difficult spots for me to be in for the past close to 8 years now is when in pain in relation to that. And it has been really a very difficult spot for me. Right, so one of the difficult spots for me to be in for the past close to 8 years now is when results are released by the Institute of Chartered Accountants Ghana, and each semester we go through this dilemma where on one side you are excited about it because students have passed, they are happy, they are really thankful for everything that you've done for them. And then on the other hand, some people also don't pass and they feel like hell is breaking loose on them. They feel like, why couldn't they pass? They feel like it's only them who couldn't go through, and it's like only them, they aren't lucky or something like that. And it's a very tight spot to be in because I need to be able to learn to be able to communicate with the person who is celebrating, and also learn to really minister to the person who is literally mourning or in pain in relation to that. And it has been really a very difficult spot to be in as an educator over the last few years in that case. And I don't know if you have checked your results already, but I hope that it was as expected, meaning that you passed the exams. Some of our students are now qualified, they're going to be chartered accountants. Some people passed all of the papers, they wrote 2 papers. Some people passed one, didn't pass the other. Some people did not also pass any of the subject that is sat for some reason. And it's all like that in that case. What I would want to tell you is that I don't know the spot that you are in. I don't know, but probably you passed all of your papers, or maybe you could not pass the paper, or maybe you passed one and you don't pass the other, and you feel like probably giving up, or you feel like it's not fair. You feel like maybe stopping and going to do something else. But what I want to tell you is this, that you cannot stop. Okay? You cannot stop. Get it? Out there. Get it? You cannot stop, because you see, you've got to carry it to the end. You didn't come thus far to give up. But what I want you to do critically is to be able to sit down and strategize and find out, why did I go wrong? Or where did I go wrong? You need to find out what was the issue. I was very excited when I was having discussion with a couple of the students who got one paper, did not get any paper at all. And some of them were giving me mature reasons, and I was blown away. Someone was like, Nhyira, I think that it's my handwriting. I was very slow in the exam hall, and so I did not even answer all the questions. I answered only 3 questions, so I left 2 questions completely that I didn't answer because I was very slow. Another person was like, hey, Nhyira, I think that I was not consistent. I didn't do a lot of work. It was 3 weeks to the exams that I started being serious in relation to what I was doing because of work, family, and all of those things. Another person was like, yeah, Nhyira, I think that I did not really have time or paid attention to the things that you were mentioning because for some reason I just did not follow your guidance in that case. And you realize that when you fail and you are able to recognize and analyze the possible reasons for your failure, it helps you to re-strategize so that you become successful. It helps you to really strategize to become successful. So I don't know where you are at. Probably you wrote a paper, 2 papers, and you passed all. Thank God, congratulations. Probably you wrote 3 papers, you got 1. Thank God, congratulations. Maybe you wrote 3 papers, you got 2. Thank God, congratulations. Maybe you wrote 3 papers, you did not get any, or 2 papers, you did not get any, or maybe you were left with only 1 paper, you wrote it and you still did not get it. In all, we're going to say thank God. But if you failed the exams, I don't want you to be pissed with yourself. I don't want you to sit down and say, why me? I don't want you to sit down and say, it's like I never get anything right. Instead, I want you to sit down and analyze what could be the reason. Because you see, the only reason for failure is to learn the lessons so that you don't repeat it again. Because anything that is done twice becomes a choice. Anything that is done twice becomes a choice. So you want to put it on your heart and say that, hey, what can I do different? What can I do separately? Where did I go wrong? Maybe you need to change your strategy. Maybe you need to change your style. Maybe you need to change your approach. Maybe you need to change the way you do your things. Maybe you need to change how you study. Maybe you need to change something, because you see, you cannot be the same person you were if you want to have something that you never had. It is stated that you cannot go to Canaan. This is a quote by Dr. Mensa Odebel. You cannot go to Canaan with an Egyptian mindset. Okay? You cannot be doing the way you were doing things last semester and expect to change the trajectory of your life this semester or this year. So what I want you to do is to sit down, take a pen and paper, if it is possible, and try to figure out for the last 6 months, as you were preparing to write the ICA November 2020 examination, what was going on? How did you spend your time? Did you study? Did you get time to go through what the things you need to go through? Did you get time to practice a lot of questions as much as you need to practice in order for you to become successful? Did you get time to do that? I believe that if you're able to sit down and analyze what could be the possible reasons, then you'll be in a better position to be able to actually pass the exams and, most importantly, take your life to the next level. I cannot overemphasize the importance of this. I cannot overemphasize why you need to do this as an individual. I cannot overemphasize why you need to become an exceptional person for this year if you're going to become successful. So what am I saying? What I'm saying is simple. If you passed, congratulations. If you did not pass, don't be pissed. Don't give up. Don't try to throw in the towel. Don't say, I'm stopping to go and do my master's. You finish your master's and come back and come and meet ICA. Don't say that, oh, ICA is difficult, I'm going to do my... You will finish your master's and come back. If you like, go and do PhD, you will still come back to the ICA as far as you want to be a chartered accountant. So don't stop the IC and go and do your master's and come back. No, continue. Change your approach, change your strategy, change the way you do your things, change the way you see the world, change the way you see the papers, put in the work, put in the effort, get the right mentorship, attend lectures, go to places, surround yourself with people who can inspire you, people who can assist you, people who can mentor you, people who can answer the questions you need, people who can put the pieces together in order for you to take your life to the next level. That is what I want you to do. So sit down, sit up, re-strategize, redo your things, and find out what it is that you need to do in order for you to become successful. Because 2021 is a new year. May 2021 is going to come up very soon. You don't want to give up. 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 You good? So, all the best. Let's see how the next 16 weeks will be like as we prepare for the ICA May 2021 examination. Strategize, focus, work hard, and I'll see you at the top. All the best. See ya. Right, so that was a short message that I want to share with you about the exams, and that's my thoughts briefly in relation to the exams. So whatever it is that you have, whatever it is that you experience, make sure that you put it ahead. Embrace yourself with it. Some of you passed all the papers you registered for. Some of you failed all the papers you registered for. Some of you got one leg, didn't get the other. It's all same. It's all good. It's all okay. But you got to make sure that you identify what was the reason why you failed the exams. It's very critical for you to identify what was the reason why you failed the exams, and what was the reason why you passed the exams. You got to understand, okay, so if you wrote 2 papers and you passed one and you did not pass the other, try to find out what was the reason, what could be the possible reason why you did not pass the paper, because that is going to really be a game changer for you and will assist you in order for you to make better decisions, better choices as we go into the future in that case. So, hey, let me know in the chat box, maybe share your experience with me so far. How was your results? Was it what you were expecting? What is the way forward? And what are you planning to do? Maybe comment in the chat box. Let me know your thoughts about it. I see some of you guys joining the stream. You are welcome. We're looking at the IFRS Masterclass, but in a moment, I'm talking a little about the November 2021 examination results. So probably share in the chat with me, what was your results? How did you go? Not a marks really. Did you pass? Did you fail? What is the plan going forward? Maybe if you have specific questions, you can put it in the chat box as well. Then I can answer you better. Maybe you have a difficulty in something, or you would want me to share my thoughts on something for you. Put it in the chat box. I'm going to read all of your comments and then provide you with some answers or some strategies on the live stream today in that case. So let me hear from you in the chat box. Andrew Opombeko. Oh, okay. I think we have solved that issue already. Then Rose also. Okay, we've solved that issue. So let me know in the chat box if there are any questions for me. If there are things you would want me to share my thoughts on real quick. So that I can share my thoughts on them. If not, then we can also proceed with our discussion. Yes, Nicole, ACCA results will be 18th of January. I think that is on Monday. So ACCA December exams will be out on Monday, 18th January, I guess. Yes. So when it is out, wishing you all the best as you wait on your results in that case. For the ICA, people who wrote the ICA, let me know in the chat box if there are any things you would want me to share my thoughts on real quick for you. So we've been on a journey looking at the non-current assets accounting standards. We've discussed the issue about IAS 16, property, plant, and equipment. We've discussed about IAS 20, government grants. That was what we did yesterday. And so we want to share some thoughts and start with our discussion on IAS 23, borrowing costs, or probably let me do IAS 40, investment property. Let me do IAS 40, investment property. Investment property. Now, remember that when I started with the standards and we started with IAS 16, we made mention of the fact that when it comes to non-current assets, there are 2 standards that guides tangible non-current assets, okay? So we said that when you take tangible non-current assets, there are 2 things. We have what we call the owner-occupied non-current assets, and then the non-owner-occupied non-current assets. We made mention of the fact that the owner-occupied non-current assets are the non-current asset that an entity controls as a result of past events, and the entity uses it in the day-to-day running of the organization. And we said that for the purpose of the entity using it for the day-to-day running of the organization, the entity is going to be accounting for that in accordance with what? IAS 16, property, plant, and equipment. But we also mentioned that sometimes an entity has tangible non-current assets, but it is for rental purposes, okay? Or it's for capital appreciation. So two things, either it is there for rental purposes or for capital appreciation. And we said that those tangible assets, tangible non-current assets, will be accounted for in accordance with IAS 40, that is investment property, IAS 40 investment property. And the IAS 16, we spent our time to look at the various things that we need to look at there. So today we want to focus our attention on the most important issue, and that is to look at IAS 40 investment property. Sazi Kamas said, watching live from Gambia. All right, that's awesome. Welcome to the live stream. Smash the like button, share the video as well. Let's reach as many students as possible watching the live stream and the playback. So let's go to IAS 40 investment property. So when it comes to investment property IAS 40, the objective of the standard is to prescribe the accounting treatment of tangible non-current assets held for capital appreciation purposes or rental purposes. Okay, the objective of the standard is to prescribe how the accounting treatment of tangible non-current assets held for rental or capital appreciation purposes. Remember that rental or capital appreciation. Remember, I made mention of the fact that if an entity owns an asset or controls an asset, and then the entity is going to lease the asset under a capital lease or a finance lease, as per IFRS 16 leases, then we cannot account for that asset as an investment property. Instead, the lease has to be what? An operating lease as per IFRS 16. Okay, sorry, as per IFRS 16. So that is the issue here. Investment properties, these are assets that an entity holds either for rental purposes or capital appreciation purposes, right? So when it comes to the rental purposes, you got to be careful. It is not finance lease, it should be an operating lease in that case. So how do we account for this? So what is the initial recognition? So let's look at the recognition criteria. Now, just like how we did in IAS, just like how we did in IAS 16, recognition criteria. Now, the recognition criteria for investment property is simple. It is just like the asset in IAS 16. The first one is that the item must meet the definition of an investment property. So the item must meet the definition of an investment property. So that particular item that we want to recognize as an investment property should meet the definition of an investment property. And what did we say is the definition for investment property? These are tangible non-current assets that an entity controls for rental, okay, or capital appreciation purposes. So the definition of an investment property must be met. If the definition of an investment property is met, then number two, cost can reliably be what? Estimated. So cost can be reliably estimated. That's the second thing. Just like IAS 16, the same issue is going to be happening here. And then number three, so cost can be reliably estimated, the definition is met. Then the third thing is that definitely the issue in relation to the economic benefits will flow to the entity, okay? The issue in relation to the economic benefits will flow to the entity. So that is the recognition criteria. Usually, when it comes to investment property, the first two are the key things that we need to be looking out for in relation to that, where you are looking at the issue about the definition being met. That's the first thing always. So once the definition is met, then you have to talk about the other issues in relation to how you can account for it, whether the cost can reliably be estimated, whether the cost can reliably be estimated. So usually these are what we talk about as the standard or the recognition criteria for it in that case. Now, aside looking at the issue about this, the next thing we want to look at is what should be the initial measurement of an investment property. So let's look at the initial measurement of an investment property. I see some questions coming in. Damilari said, it's been a while. Yeah, Damilari, I hope you're doing well. Good evening, sir. Please, when are we starting MGE lectures? Nigeria ICAN exam is March. Okay. What's the full meaning of MGE? Can you give me that? Can you give me that? Management, governance, and ethics. Am I right? Let me know if I'm right. Bini Perry said, good evening, sir. Trust you are doing great. Greater wisdom and superior discernment in Jesus' name. Amen. Yes, I'm doing well, and I hope you are also doing well. Comfort Dompre, I see you. You are welcome to the live stream. Now, remember that we started our lectures for the ICA May 2021 examination on Monday. And for 390 Ghana cedis per paper, you can enroll and study directly under my mentorship. You can see the link pinned to the chat. You can click on that and check out on our page, or you can check the link in the description and be able to visit the website nhyirapremium.com, and enroll in a course and study directly under my mentorship for the ICA May 2021 examination at 390 Ghana cedis per paper. So let's look at the initial measurement, or what we will call initial recognition. So how do we initially recognize investment property? How do we initially recognize investment property? So IAS 40 states that investment properties should be initially measured at cost plus any directly attributable cost. Okay, should be measured at cost. So initial measurement investment property should be measured what? At cost plus directly attributable cost. In other words, just like how we did in IAS 16, where we said that it should be initially recognized at cost plus any direct cost incurred in bringing the asset to its present use. That's the same thing we're talking about here. That's the same thing we're talking about here in that case. So initially, it should be measured at cost plus any directly attributable cost. In other words, in the acquisition of the investment property, if we borrowed some money, then some borrowing costs will come in. If it requires us to do some dismantling, then we'll discount it into present terms as per IAS 38 and account for it. This one will be as per IAS 23, then we account for it. Then if there are any fees that we paid in the acquisition of the property, that will also be included. So in other words, any directly attributable cost we incur in acquisition of the asset will be accounted for or included in the initial cost of the asset. So that is what we mean by the initial measurement. Initial measurement. So after the initial measurement, we go to the subsequent measurement. Stay with me carefully on this one. So initial measurement, you will debit investment property and you credit cash or bank or payables if the amount is still outstanding in that case with the initial cost. With the initial cost. With the initial cost. So that's the double entry for the initial recognition. Then we come to subsequent measurement. Subsequent measurement. IAS 40 investment property states that on subsequent measurement, investment property can be carried either using the fair value module or the cost module. So on subsequent measurement, there are two modules that we can use, the fair value module and the cost module. Now, you know this already from IAS 16, so it's going to be very easy here. Now, with the fair value module, so let's talk about that first. With the fair value module, what happens is that it means that the asset is revalued at the end of each reporting period. The asset is revalued at each reporting period. That's very, very important. Then what happens is that any revaluation gain or surplus or losses, any revaluation gain or losses on the revaluation is recognized directly in the profit or loss accounts. In the profit or loss accounts. In the profit or loss accounts. So stay with me carefully. When we use the fair value module, it means that the investment property will be revalued at each reporting period. Then any revaluation surplus or loss on the revaluation are directly recognized through the profit or loss. That's very, very important. That's very, very important. Then the third thing is that investment properties are not depreciated. Investment properties are not depreciated. Very, very important in relation to that. Investment properties are not depreciated. Very, very important. So number one, under the fair value. Now, the fair value module is also the default treatment. In other words, usually investment properties are carried at fair value. Because we don't use them for the day-to-day running of the organization, they are not depreciated. Okay, they are not depreciated. But if you remember what we discussed under IAS 16, I told you that the fair value module can only be used when there is what? An active market, there is a ready market, there are a lot of buyers, a lot of sellers, then we can use the fair value module. The same thing happens here. So you cannot just get up and say, this is an investment property, so I'm going to use the fair value module, even though it's a customized investment property, even though there is no ready market for the investment property, even though we cannot place a value on the investment property, then it will still be valuing it at that amount. No, we don't do that. We don't do that. That is why we have the revaluation module and the cost module. So where there is no ready market available for the product, or it is impossible to account for the asset using the revaluation module, the standard says that you have the second choice to use the cost module. So we can also use the cost module. Now, with the cost module, investment properties are carried using the benchmark method in IAS 16. Okay, so the investment property is carried as per IAS 16. So the way the cost module is done in IAS 16, what it then is going to mean is that we are going to depreciate the assets here. Are you getting it? So the properties are depreciated like any other assets. Okay, the properties are depreciated like any other assets. The properties are depreciated like any other assets. So that is the cost module in relation to that. So we have the revaluation module and then the cost module. The revaluation module and the cost module. That is very, very critical in that case. So the fair value module, if there's a ready market for the assets, then we go with the fair value module. If there is no ready market for the assets, then we need to use the cost module. If we use the cost module, then the entity may decide to depreciate the assets, because even though they are not using it for the day-to-day running, so the depreciation is happening under the cost module, not because they are using the asset for the day-to-day running of the organization, but because the asset is being carried at cost module, and the entity would want to account for the assets in accordance with the way it should be accounted for in that case. So they depreciate it more or less like amortizing the asset over its economic useful life. So that is what we mean by subsequent measurement of investment properties. Subsequent measurement of investment properties. Any questions, let me know in the chat box real quick. If you have any questions for me, put it in the chat box real quick as we continue with our discussions. Now, we would have been done, or we would have finished or said goodbye, but then there is another issue that we need to deal with. That is called transfer of investment property. Sometimes there can be transfers into and transfer out of investment properties. And when these changes happen, they must be accounted for in a certain way. They must be accounted for in a certain way. So stay with me. Let's look at the principles on that. So transfer of investment property. Transfers into and out of IP. Transfer into and out of IP. So how should this be treated in that case? So stay with me carefully. So number one, if an investment property, okay, is changed to an owner occupied, how do we account for it? Two, if we change an investment property into an inventory, how do we account for it? Into inventory, singular. Third, if we change an owner occupied into an investment property, how do we account for it? And then 4, when an inventory is changed into an investment property, how do we account for it? So stay with me carefully well. Number 1, when we change, we have been using this asset as an investment property for the past year. So we've been using the asset as an investment property. We've been happy about it. We've been using it for that purpose as an organization, as an entity in that case. Then for some reason, the entity changes its usage as being an investment property or as being an asset that we've been leasing out to now being an owner-occupied asset, or it was a land the company has bought and they had not developed the land or done anything on the land over the years. So now they've constructed a building on the land, and so now the land can no longer be an investment property, but it will become what? An owner-occupied property. So in that case, how do we account for it? IAS 40, the standard states that the value that will be carried on the date of the change will be the fair value of the property at the date of change. The fair value, because remember, investment properties by default is carried at what? Fair value. So when we are changing from investment property to owner occupied, what we do is that we determine the fair value of the asset at the date of the change, and that will be the value at which we will initially recognize the asset in accordance with IAS 16. So that from there, we will now start accounting for the asset in accordance with IAS 16, property, plants, and equipment. Why? Because now it has become an owner-occupied asset. Okay, I see a question coming from Rose. But if investment properties are not to be depreciated, by using the cost model allows you to depreciate the asset, does this mean the property will now be used as owner-occupied? No, Rose. So we are not depreciating it because it's owner-occupied. We are still maybe renting it out as an asset and receiving rental income. But because it's a specialized asset, we cannot, and we don't have current market value, or we cannot determine current market value of the asset. That is why we will rather account for it in accordance with IAS 16 using the cost module in that case. So it doesn't change it into owner-occupied assets. It is still an investment property, only that because we cannot determine the fair value, we have to use the cost module and depreciate it in that case. So, Rose, let me know if that makes sense for you. Number 2, investment property into inventories. So we've been using this property and now it should be converted into inventory, meaning that maybe the company bought the land, they didn't know what they would do with the land, or the company had this asset, they've been leasing out the asset or renting out the assets, and then now they want to sell the assets. So it has changed from an investment property IAS 40 into an inventory IAS what? 2. So the initial recognition of the amount is going to be what? At fair value. At the date of what? The transfer, the same thing. At fair value at the date of the transfer. Then from there, because now it is going to be an inventory, it will be accounted for in accordance with what? IAS 2. To be accounted for in accordance with IAS 2. So that is the idea here. That is the idea here. I hope it makes sense. So when it is an inventory, you still determine the fair value at the date of the transfer, but on subsequent measurement, you account for it in accordance with IAS 2, inventory. If you change from investment property to owner-occupied, the initial recognized amount is going to be the fair value at the date of the change. Then on subsequent measurement, you account for it in accordance with IAS 16, property, plants, and equipment. 3, owner-occupied to an investment property. So here, we are using the assets for business purposes, but for some reason, the entity is now going to be using it as what? An investment property. So they've been depreciating the assets, but now they are going to be seeing it as an investment property. In that case, what happens is that we will revalue the asset under IAS 16 and we will treat it as an investment property. Why is that important? Because you know that investment property must be carried at fair value. So what you do is that you determine the carrying amount at the date of the transfer. You determine the fair value at the date of the transfer. If you get a revaluation surplus, then definitely it will be taken to the OCI in relation to that other comprehensive income. But if you get a revaluation loss, then you are going to be carrying it in the profit or loss accounts. This is the time where OCI will come to town under this kind of change. But on subsequent measurement, it becomes an investment property, and any revaluation loss or gain will be directly recognized in the P&L account. I hope you got that very well. It's very, very important for you to get a principle there. Okay, Rose said, okay, thank you, sir. You are welcome. Then the last thing is, if we change an inventory to an investment property. If we change an inventory into an investment property. So something we've been selling as a stock, and we've been accounting for it in accordance with IAS 2 inventories. Now we are going to be accounting for it as an investment property. So how do we do the treatment for this? How do we do the treatment for this? Very, very simple in relation to that. What's going to happen is that we are going to just determine the fair value on the date of change, and any profit or loss will be recognized in P&L. We determine the fair value at the date of change, and any gain or loss will be recognized in the P&L. Any gain or loss will be recognized in the P&L. So these are the 4 things you need to understand when we talk about transfers into and out of investment properties. Transfers into and out of investment properties. So you must understand the rules, you must understand the principles that governs each of these. Any questions for me real quick? Any questions? Everybody good? Any questions for me? Especially these 4 treatments. So in the exam hall, probably this is where the examiner could throw you at, where an inventory is being recognized as an investment property, or an owner occupied is being recognized as an investment property. How do you account for that? That is very, very critical, and that is very, very important. Any questions? Everybody good? Any questions? Everybody good? Okay. So it means we good. So that is what you need to understand when we talk about the issue in relation to IAS 40, investment property. The takeaway that you need to look out for here will be the initial recognition, the subsequent measurement, and then the transfers into and transfers out of investment properties. The transfer into and transfer out of investment property. Dari Oyeleki said, hello, sir. If we choose to maintain the cost module approach with an option to depreciate since the fair value can't be reasonably ascertained, can the same amount be maintained in our books? When you say the same amount, what do you mean? No, once you are depreciating, like you depreciate it in accordance with IAS 16. So you calculate your depreciation, and then the carrying amount will become the cost minus the depreciation figure you had, so that your depreciation will be recognized in the profit or loss account as an expenses. So the amount initially recognized cannot be what will be taken to the statement of financial position. No, it will be that the cost minus the depreciation you charged for the period. So you just account for it like IAS 16. That's all. You just account for it like IAS 16. That is all. So that is the idea about that. I hope it makes sense, Darren. So any other questions for me real quick? Any other questions? So I'll be concluding around here today, and God willing, next week we'll be continuing with our discussions. This week, what we have done is to be able to look at some of the standards, and we've been able to talk about 3 standards so far. Like in details, IAS 16 property, plant and equipment, IAS 20 government grants, and IAS 40 investment property. Now, in the chat, in the comment box, I have put the series for the whole thing there, so you can get access to it and get to watch all of the part 4 or 5 videos there. If you're on this, the remaining 1 to 4, you can watch it in the comments box or in the chat box. Dari said, what I mean is that, can we choose not to depreciate the amount at all? Yes, the entity may choose not to depreciate the amount. It's possible. The entity may choose not to depreciate the amount. But all those judgments would have to be made, taking into consideration a number of factors. I hope you are getting it, Dari. So they can decide not to depreciate it at all, and then it will be carried at the historical amount. In that case, it could be done. It could be done. That will be if the entity realizes that we can't determine the fair value, but then the value has not also fallen. Okay, we can't determine the fair value, but the initial value, we don't think it has fallen based on our understanding and how we are using these assets. So they will still be carrying the same amount that is at historical cost in their books. So that is very true. The same amount could be recognized or carried in the books of the company. So that is it about that. I'm going to conclude around here today. Thank you very much for joining the stream from Monday up to today. It's always a pleasure coming your way. In case you've not subscribed to the channel, you can click on the subscribe button and click on the bell notification icon. That way, when I go live, you'll be the first person to be notified by YouTube. So you can join me on the live stream so I can assist you in order for you to prepare well for your ICAG May 2021 examination. Like I said, if you are planning of studying and joining us, learning under my mentorship online for the ICA May 2021, you can enroll at 390 Ghana cedis per paper to study online. This gives you access to our lecture videos, ebooks, catalogs, and you'll be able to also join our weekly live Zoom sessions so that you can be prepared well for the examination and study under my mentorship. And it's 390 per paper. You can see the link pinned in the comments and also in the description of this video, and join us. In case you have any inquiries, also you can reach us directly, call or WhatsApp 050-114-9296, 050-114-9296, 050-114-9296. If you are outside Ghana, you can WhatsApp, you can add +233 because that is the country code. So +233-50-114-9296. If you have any inquiries, you can reach us here, send it up, and then we will be able to assist you to answer any questions that you may be having. Remember to also follow me on Instagram because our meeting details and other video content will also be posted on my Instagram page. So you'll be able to watch them and follow it as well. So you follow me on Instagram as well at Nhyira Premium. And that way you will know the development and everything that we'll be discussing on the channel. So you can prepare well for it in that case. So thank you very much. Have a blissful weekend. Make sure that you study, continue to study. Don't ever put the book away. Make sure that you are studying every day consistently and put in the work, put in the effort, because I can guarantee you that is the only way you can actually become successful and most importantly, be able to take your life to the next level. So have a great weekend.